Hello, everybody, and welcome again to my daily analysis and market insights. Today, I want to cover valuations in the S&P 500 and some opportunities that I see in the market in terms of where we can cycle our capital into because of those lower valuations than the relative market or the broader market, especially the S&P 500. And then I also want to go into an analysis of crypto, the state of crypto, where we can go. I think the market right now is dipping as we speak. And I did warn you guys yesterday that you should be cautious when getting into positions in crypto, especially now after the hype and the move that Bitcoin's made since September. And then I also want to go into just a broader analysis of the markets overall, commodities, Forex, the dollar, oil, gold, etc. So let's get right into it. I'm going to be sharing my screen so we can get into discussing the analysis that I have in terms of the markets right now. I want to go into the S&P 500 yesterday. Okay, so yesterday with the S&P 500, you can see here that finances have done exceptionally well. And this is the industry that's done exceptionally well overall since the election with Trump, especially regional banks. And regional banks have also impacted the Russell 2000, increasing the index over the last two to 3 days since the election. With the S&P 500, you can see here there's a bit of a sell-off or profit taking happening with Nvidia, Apple, and these mega caps, and money cycling into, I think, growth stocks. So I've been notifying all of my members in my Telegram group, a free community that I have, where I'm telling them constantly that the opportunity in the market, especially the stock market, is the Russell 2000 and growth stocks or small to medium caps. Okay, so let's go into the second. Sorry, 1 second. Okay, so with what I wanted to talk about in terms of today's topic, the main thing I want to talk about is valuations. So where are we relative to historical prices or historical PE ratios? And at the moment, when we look at the average of the last 25 years, so the average of the 25 years, which is this yellow line, the yellow dotted line here, we're exceedingly above that area, and we're getting to that area where we were overvalued in 2020 over here, right? So we are entering a point now where I think valuations are getting a bit too high for the market, and we're seeing the consequences of that, and you can see it here as well. We're seeing that we are now, when we're looking at multiple, the averages of multiple 4 valuation indicators, we can see that again we are entering that level that we were back in 2000, and also the level that we entered in 2020, 2021, before we had the huge bearish move in the market, which lasted around a year or so. So I am considerably worried in terms of that factor, where I think valuations are a bit too high and potentially we can get that sell-off. And then if we look at Warren Buffett, we look at other investors, in particular Warren Buffett, we can see here in this chart that Warren Buffett is moving into cash. So he's holding more cash now than ever before. And when we're talking about the relative cash that he's holding based on his portfolio, it is equivalent to the 2007 crash. Okay, so he's holding more cash now than he did in 2020 and previous years. And he's holding as much as he was holding, and a little bit more than 2007, 2008. So that's or as a percentage of his assets. Basically, he's holding a larger percentage of his assets in cash than ever before historically. So there is some worry there. I think he's not seeing the valuations because he's not seeing companies as good value, because valuations are now very, very high. And again, like I said, this is a worrying sign for the markets. So if you guys want to hedge against the market, I think one of the things that you can do is probably go into or invest in Berkshire Hathaway, because they're high cash, and I think they're holding bonds primarily. Now, going into valuations and where we stand in terms of other markets, not overall. When we separate these markets, we see here that this purple line is mega caps. These are the 8 mega caps. Their valuations are around 30 or 28, 29. And then we can see here the S&P 500, or the large caps, are around 22. And then we get the S&P 400 mid caps and S&P 600 mid caps around 16. So if you're looking to make some money in the markets right now, the play that I'm looking at as well is the play where we get these medium to small caps getting closer to the valuations of the overall market, similar to pre 2018, 2017. We ended up getting close here as well in 2020 before we saw the crash. So that is the play now, that the closing of the difference between these two groups of companies, essentially, and the S&P 500, or the broader market. So that's the play. I'm looking at Russell 2000. I'm looking at mid caps. I'm looking at small caps as the key areas to invest. So post-election, what I wanted to cover here is, are we seeing the right industries moving? What industries are moving? And are they in line with my thesis about the Russell 2000 and smaller caps? And in 2016, we saw similar industries move, and we've seen them now again here. As you can see here, the Russell 2000 value, and then we see the financials, which have done extraordinarily well, especially the regional banks. They've done exceptionally well here. And then we see the Russell 2000 value, S&P 600 again, which is the smaller caps, all doing very, very well post-Trump election. Again, post that impact from the overall hype and euphoria that came in from his election, as well as any election would have probably resulted in some growth in the Russell 2000 and so on. And I also want to discuss here the point that we have the interest rate reduction coming in, or we've had an interest rate reduction coming in from the Fed. And I think over the next few months we're going to see the lowering of rates overall, and obviously that's going to be good for growth stocks, and it's always good for growth stocks. So on to the next one. As you can see here, I discussed financials doing exceptionally well, KRE, and they have been the best performing in the last 5 days. So this one's been the best performing out of all the other industries at the moment. Obviously, you've had crypto doing exceptionally well, and a few other ones, but you see gold and a few metals not doing as well during this period. So financials have done extremely well. Regional financials were popping up all over my my screens when I was screening for stock opportunity, investment opportunities based on momentum. They were all popping up for me. I did invest in a few, but in particular, the ones that were of interest that you guys could have invested in were the regional banks, the smaller caps. They're the ones that did exceptionally well. Okay, so the Russell 2000, if we go into the idea that the Russell 2000 would do well in the next few months, or even running up into 2025 and 2026, if we look at elections, so these are election periods. So we look at the 7th of, 2016, 2020, 2024. If we look at 2016 and 2020, we saw a 40% increase in the Russell 2000 index. And then in 2020, we saw a 48% increase until we achieved a new all-time high. So at the moment, we're around the previous all-time high, and we've just started this move higher. And I think we can safely say that if this momentum continues and this overall trend does continue, and if you look at the RSI here, is around the same level in all 3 occasions as well. That's something I just noticed now. If we do get that move going higher, we could probably achieve 3,000, 3,200, or maybe even 3,500 on the Russell 2000 here. A 40% move But if you pick your stocks well within that sector, you're probably making 2 to 3x on your money in the next, probably in the next year or so. Okay, so realistically speaking, it takes about a year and a half for that move to go into that 40% region. So again, in line with my predictions that we're going to get a bullish market in 2025 and then probably a bit of a sell-off in 2026 or a dip, a correction in the market. Okay, and then S&P 500, if we go into the S&P 500, where do we stand with S&P 500 and where do I think we can potentially go? Yesterday, I mentioned that the Fibonacci level, the 1.618 Fibonacci level around 6,100 is one that I'm watching carefully. We did see a bit of a sell-off yesterday, or profit taking around the 6,000 level. If we get a bit of a dip, then we probably go back up to 6,100. Goldman Sachs and other financial institutions are saying 6,300, and then with an overextension, we're probably looking at 6,700, especially factoring in that we might be in about 2/3 into a bull cycle in the markets, and obviously the third leg is still in the play here, and I think we can get that overextended move to around 6,600, 6,700, where the valuations are too high, where the market no longer has any buying power, and then we get the dip coming back in. Okay, and if you look at here, we can see that the S&P 500 level by Goldman Sachs is around 6,300, and then we have these other charts as well, which show similar things. Okay, so in terms of the markets, we want to also discuss breadth. I've discussed this in the Telegram group previously. Prior to the election, I did highlight that we were getting some strong buying momentum into the markets, and I also mentioned that when we do see these key moments where it goes above this 15 area here, we then get momentum coming in. So if you look at all these examples here, 2003, 2004, those were key moments of breadth, and then we had a run up, and then we had 2010, 2013, 14 run up, and then 2017 and another run up, 2020, and so on and so on. This was the dip in the correction in the market in 2022, 2021, and then we've had a run up, and then now we're entering that third stage, I think, in the market. We had the first dip, second, and then dip, and then now we're entering the third stage with a lot of breadth in the NASDAQ coming into the markets. And then if we look at the cycles, so this chart covers market cycles, as you can see here. It compares how the current cycle, this 2022 bull cycle, compares to all the other previous bull cycles. One of the ones that I'm watching carefully are this the mean around this area here, because it seems to be moving around the mean. And I'm also watching carefully this 1994 example right here, because I think we can easily go into this kind of cycle, 1994, where it overextends, or we end up in a cycle which is very similar to the 60s and the 70s. So 66, 62, and the 70s. Okay, so that's what I'm seeing here. So again, I think it's still very bullish. We are around 2/3 into the cycle, in my opinion. We are not finished yet, so that's why I think we can still be bullish in the S&P 500 and the indices overall. And I think there are plenty of opportunities for the next year, maybe also the next 18 months going into 2026. So that's something that you should bear in mind. Okay. Now I wanted to share with you guys quickly my charts. I wanted to cover Bitcoin. So that's S&P 500, that's Russell 2000. Those are the key opportunities that I'm seeing. alongside the Russell 2000 and small caps, I do see Chinese stocks as an opportunity with 3 companies. I think it's JD and a few other ones. I don't have an image here to show you guys, but there's 3 companies in the Chinese market that are reporting earnings. I don't think earnings season is over yet. They're reporting earnings, and potentially that could kickstart another momentum move in the Chinese market, and then couple that with a potential stimulus of some sort from the Chinese government. We can then see Chinese stocks doing really well in the next few weeks. Those are my plays. I'm also looking at energy. I mentioned that yesterday, but I don't want to go into it too much. Now I want to move into crypto. And yesterday I warned everybody about buying on FOMO, especially if you're a newbie. You don't want to be chasing the markets. So I mentioned that FOMO might be something that you guys should be very, very cautious about, or going into the market right now. Okay. And if you look at the markets today, if we look at Bitcoin today, we're seeing a 3% dip, which isn't that significant compared to the fact that it's moved around 15, 16%. But I did warn you guys that I thought it would enter around the 80 to around the 75 level again before we get that real momentum play. I'm looking to sell here personally. I'm already in a position, but I'm looking to sell here on some weakness and take profit very, very soon. So what do I see? I probably see a dip to 80 and then a move back up higher, or I see a dip. So if we just close this one, I see a dip to around 75, 73, and then a move back up higher. Okay, 75, 73 might be a bit too deep now. Okay, so we might be looking for that around 80 area. That if it takes time to consolidate here, might give a lot of buyers opportunity. I think today is just profit taking at the moment. People are a little bit fearful. People are seeing that it's overextended, just like I am, and there's going to be profit taking happening. Whether that profit taking will lead onto a sell-off to around 80 and then maybe even lower, we have to see how the market reacts in the next few days. Ethereum, I think, is very similar here. If we look at Ethereum, just have to wait for the chart to load up. So with Ethereum, very similar movement here, slightly deeper. I think we can get a move back to retesting this area. And this is what I was really looking for. And I mentioned it in the video yesterday, that this is the area that I'm looking for a retest. So I want a retest of the 3,000 to 2,800, and then I want that move to go higher. Whether that's 3,000 or 2,800, I won't know until we get to the 3,000 area, and then we'll find out based on the price action, the candlestick formations, and whether it's being bought or not, how cheap it becomes for technical analysts. But then this is a key area here on a rebuy, and then if you're interested in the other trades that I've mentioned yesterday, we can look at Cardano, a very similar situation, overextended, this huge gap between the 10 EMA, and price needs to either price come back down or consolidation for a little bit of time around this area for the moving average to get nearer, and for it to then start finding some support on these dynamic EMAs. Fine. In terms of ideas for crypto, I would wait for the dip. So I'm not looking to buy again any opportunities. I'm actually looking to take profit here around this area. Depending on how much weakness it shows, I might take some profit, and then look to buy on the dip after consolidation. So ideally, I'm looking for like a VCP pattern, a consolidating pattern around this area here, a bull flag, whatever it might be. And then I'm looking for that continuation higher to buy again into these crypto opportunities. I think this dip will probably be the final dip that you guys are going to get in terms of buying crypto. Hopefully it's a deep one. Hopefully we go all the way to, for Cardano, all the way to 0.49, so 50 cent per Cardano, basically 50 cent on Cardano, and then we go to around 75 on Bitcoin, because that would be the perfect dip to bring in the momentum, in my opinion, because I care about the momentum that comes in post these dips and post these support and resistance areas. In terms of targets, I do have the 120k target here. This is a key Fibonacci level. I think it's a perfect target after the dip for it to go above to that area, especially now considering that it's already hit 90k. So, if it does dip, then the next level up is around, it's not 100k, it should be 120. So everybody's speaking about 100k as the level. I think 120 is the level for me personally. That's the level that I'm looking at. Okay, and with Ethereum, I'm looking for all-time highs around 4k and then 5k and above on a very serious bull run. Okay, so going into other markets, I want to go into commodities. I'll start with the dollar first of all, and I think with the selling off in the market, as well as the S&P 500, I think it's selling off a little bit today. We're seeing the dollar tick up a little bit. So again, the dollar showing key momentum. These are my notes from a couple of weeks ago where I noted that we could see a dip and then a rise up. I personally think that this could be an easy resistance area, but with the momentum that I'm seeing at the moment, maybe we go even higher to around 1.65, 1.7 before we get the resistance. But let's see. We're still around that area where we could get the resistance on this and then comes back down. And then we get a move in the markets with the euro dollar and so on. Okay, so going into other commodities, I want to go into the US oil. It dipped and today it's rising. It's just capital cycling in and out of different industries. Personally, I would have liked, and I would like, for oil to go to 65. But from what I'm seeing, there's a key area here where we're now getting some sort of consolidation, okay? So a wedge before we then break up higher. We'll also have to see here. This was like a temporary rise above this area. There were some factors there. I think it was the war with Israel or the conflict with Israel and Iran. I can't remember. But yeah, so essentially I'm looking for that dip. If we can get the dip a little bit lower, it'll be perfect. And then I was looking for those plays that I mentioned yesterday in the video where I said, Oxy and some other oil companies and plays out there to trade, as well as oil itself. I might even trade it long. Natural gas was rising yesterday. We had significant moves up in natural gas. Today is dipping a little bit or consolidating, is flat. And I wanted to quickly cover it here and see where we are. Again, around this area here. I would probably be looking to get out of this trade now myself. I just want to see how it reacts to 2.8. And then, depending on how it reacts to 2.8, I might just take profit for whatever is remaining in this trade and then look for re-entry on the dip. Gold, let's go down to gold, and then we'll probably wrap up the video. We'll go to gold. Gold, I said yesterday that we are now in a bearish move in gold, and I think we're following that tendency there. If we do go a bit lower, then I'll be looking to buy. So if we go to around this area, retest of this consolidation area here, around 2,500, I'd probably look to buy. It's been bought now around this previous support area at 2,600. But I think, we could get a move that's slightly deeper, especially considering that it's become overextended on the higher time frames as well. And, we need a little bit of a dip, to be honest, before we go higher. Silver, let's look at silver very quickly. Silver, again, very similar. Find support on the previous dip. So now we're getting a double support here on this previous dip, but I think we go higher, then come back down. So move, come back higher, retest of this area again, come back down, retest of the 32 area, and then come back down. That's pretty much it. And then 10-year Treasury is going higher. We have a move here rising. Okay. And in terms of where it could go, I was expecting it to find some key resistance here, but you know, you never know. You never know where it's going to find. And I think with this one, it still could find that resistance again. So maybe there's an up day here and then a resistance. Ideally, we need this dip. Ideally, we need to move back down to 4.1, 4.6 on the 10-year. And then here I just noticed, where is it? Cacao, or is it cotton? Cacao, yeah. Cacao has been one that I've been watching for a very long time. And I thought maybe here we'd get a break. I didn't really like it. Potentially now we could get a break above and a nice continuation move for around 50% profit from 7,000 to 11,000 back to retest these all-time highs. So 1 to 3 risk reward here. Cacao is one of those trades that, you know, I might or might not take depending on how I feel on the day and whether it's of interest to me. But yeah, very, very good here overall. Just be very, very mindful of the crypto. Look at the valuations in the S&P 500. And if you are going to invest in anything, the likelihood is that we're going to get a slight consolidation now coming into post-election. We're going to get consolidation on maybe a little dip, and then we're going to get this significant move higher where we get that bull market coming in. That's something that we should be watching for. And guys, if you want to follow me on social media, you can go and follow me on Instagram. I do provide little bite-sized pieces of content, 30 to 1 minute 30, where I talk about the markets and the current situation. And if you want to become part of my Telegram group, it's completely for free, where I share this information throughout the day and some of my trades and trade ideas. I can't share everything in a video. I'm trying to keep it as short as possible for you guys, around the 20-30 minute mark. Go and join via the link in my bio. You can join that Telegram group. And I provide insights and analysis there every single day, ideas. And if you have any thoughts on the markets, you can always ask me questions as well. So yeah, go and join that, and I'll see you tomorrow.